In this track and trade trading training video, I want to talk about one of the biggest questions that I get. One of the biggest questions I get is people ask me, Lan, how do you know whether to enter the market with one contract, as we've done in many of these examples, or to enter the market with 3 contracts? What makes you have the confidence to go in with multiple contracts in an initial stage? Well, the most powerful tool that we have in investing in the futures market is the ability to look at the seasonal nature of a market. Now think about commodities. It's the one market that we have this luxury with. We don't have it in stocks or Forex. Only in futures do we have this one capability where we can go through and we can look at the nature of a market or the seasonal nature of a market. Now think about the different commodities. Think about the grains, for example. Corn is planted at the same time every year. It's harvested at the same time every year. It's susceptible to damage at the same time every year, or drought at the same time every year. It's susceptible to transportation problems at the same time every year, and storage fees at the same time every year. So because of that, commodities are very seasonal in nature. And one of those commodities that is very seasonal is gold. Now, surprisingly enough, gold is what we call a perpetual commodity. It's one that's it's created all year long, but it has a specific time of the year when it's in higher demand. Whereas corn, for example, is only created one time of the year, but then has high demand throughout the year. So what we're looking at here, this is a gold example, and gold is primarily used for jewelry, right? For jewelry. And when do we give jewelry? When do we buy jewelry the most? Birthdays and, of course, Christmas, right? Now, the commodities market, of course, this is the wholesale market. So all the wholesalers for gold are starting to buy their gold around the 1st of September into October. That's when the big gold rush in the commodities market comes along. So what we do is we take the bulls and bears, and the bulls and bears gives us the buy and sell signals. It lets us know when the market's going to begin to rally. And the seasonal plug-in that we have in track and trade, the seasonal nature, tells us when the big rally points are expected seasonally on any given commodity. Now, this is a wonderful tool. You can see how seasonal this market is being. Now, I've got the seasonal set to 10 years, which is the blue, and the 15 years, which is the red. Now, the filled one is just for looks. It doesn't really matter as far as what's going on. All it does is it gives us a different view. But I like to look at the 10-year and the 15-year averages. So we notice that right through here, that during the 10 and 15-year average, we see a nice big increase in prices. So because of that, and we notice that the market's been being quite seasonal in nature, going kind of sideways, just like the seasonal nature of it is here, I'm going to look for a big rally point right here. So what I do is I like to come in with the bulls and bears, and I like to look at areas in which I think we're going to see big price increases. So I lay these lines in and I say these are my target zones. So I'm looking for a buy signal right in here from the bulls and bears for a nice rally point. So as the market moves forward, we're in a yellow zone, yellow, 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 yellow. I'm waiting for a buy signal. And there's a buy signal right here. It's coming in. The timing is just right for it with this nice big seasonal uptrend. So at this point, I might want to consider, it's not a very good buy signal, is it? It's actually an inside day. It's a non-event day. Now, it's a buy signal nonetheless, and it is coming in at the right time. So I'm going to come in here, and if it continues higher, I'm going to get in with 3 contracts. If it doesn't, I'm not going to get in the market. So I step the market forward. Of course, it goes higher, and so we get filled. And since we're in a time machine, it says you need to open your account. Let's come back to September 3rd, and let's get into this market. Let's put in $10,000. We're going to hit OK. And this market rallied nicely right here. Now we need to put in our stop. And of course, this is where we can use our bulls and bears blue light system. I'm going to come in and turn on the chart properties. I'm going to turn on my my bulls and bears blue light system. I can also come in here and turn on my parabolic SAR, which I kind of like to have in there as well. And now I'm going to come in and I'm going to place my stop order back behind the previous. I can come in here and I can be a little bit more cautious, or I can be a little bit more aggressive. Since we're in a situation where we're in line nicely with the seasonals, I can probably be a little bit more aggressive because or a little bit more aggressive because I'm in line with the seasonals. It gives me a little bit more confidence. So I'm going to break my stops apart here. I'm going to put 2 up close, right behind the previous green, and the market did rally quite nicely. And then I'm going to put another one back behind the first yellow. And notice how sometimes I break my stops apart. It gives me better advantage in the market in case I get stopped out. I'm not completely stopped out. Now as the market rallies, if it continues higher, oh, nice move. I can come up here. I can actually move this one to break even. I can move this one up to where that one was, back behind the previous green, and I can just let this market have a little bit of room to breathe and grow. Now look, the blue light is getting ready to catch up to my initial stop here behind the first green. So I'm going to come in here, and I'm going to say, I'm going to go to the settings. I'm going to say trailing stop based on the blue light. And if that catches up, it's going to rally up there with me, and it's going to take that stop. And at this point, I can break my other stop apart. I can come in here and go to settings, and I'm going to say, okay, I want this one set to 1, and I'm going to leave that one at break even, and I'm going to place another one maybe back in here right up against this area of resistance right here, or support. So I'm going to sell one on a stop there. So now I've got my 3 stops broke apart again, and as that market rallies, I'm going to continue to follow and trail. And now at this point, I can move this one a little closer if I want to try and protect some profit as that thing rallies up some more. Now look, the red light back here, the parabolic SAR, is actually caught up to my break-even point. So I'm going to come in here and I'm going to go settings, and I'm going to put this a trailing stop at the parabolic SAR. Hit OK. Now as those 3 stops move independently up this trend, I can take advantage of the seasonal nature of the market, multiple contracts, and multiple areas of stop placement to protect myself. Now as that market, now it took us out of 2 positions here. The next one, let's come over here and see how much money we're making. We're up $11,000. And as it continues higher, now look, we have an opportunity. This is the blue light coming down. If we wanted to, we could put a re-entry point on here, but we're reaching the rally point, so maybe we don't want to do that yet. And it's coming in. See if we get stopped out. And this market's continuing to rise, even though, okay, we've reached our peak and we're still in the market and we're trailing up with our blue light system. And as this continues to rally, did we get stopped out? Nope, it's still holding us back nicely. Nice rally, and we're still in the market. Notice how we held our one stop way back. That helped us stay in the market and have some staying power. And of course, this market just continues to rally all the way up this trend, and we're making all kinds of nice money. And we got stopped out once here. We had an opportunity to get back in the market on the blue light. We didn't take it because we felt like we were at the top of the seasonals. But had we taken it, that would have been a nice position to get into. But you can see, using multiple contracts kept us in the market by holding our stops back a little bit further. And this is how we take advantage of these types of markets.